as a starting point, okay, for some reason we think we need to bail out banks. There are different options, and using the taxpayer money, public money for this, is the worst of all these options. So it's shocking that this is the one they're always going for. Let me just go to this actually. So it was the ECB that forced the Irish government to bail out the banks, and therefore Ireland moved from being fiscal poster boy to being bankrupt and having to call the IMF in. That was an ECB policy. The ECB could have allowed its offshoot in Ireland, the Irish Central Bank, to solve the problem at zero cost to the taxpayer. All you need to do is for the central bank to purchase the non-performing assets of the banks, move them on the central bank balance sheet, then the problem is solved. Because what is a banking crisis? Well, there's an accounting problem with the rigged accounts of the banks. We know they're rigged anyway, and so there's a bit more rigging. And you can simply change the numbers, and the problem is solved. Why should people be unemployed for this? For some bookkeeping problem? Well, don't worry, I'm not advocating to fiddle the books. You can use current accounting rules to solve the problem at zero cost to society. Let me just try to get this. If we look at Japan in the 90s, where the banks were bust and then disaster upon disaster happened, it started with a banking crisis. Well, there was actually a bigger banking crisis in Japan in 1945. The banks were 100% bankrupt. In 1990, 1992, 1993, they were only 25% bankrupt. And 25% of the balance sheet was non-performing. As we said, that's of course more than enough to bust the banks because they only have 10% equity or less than 10%. But in 1945, 100% of assets were non-performing. Also, in 1945, companies were 100% dependent on banks for funding, whereas in Japan in the 1990s, only 50% or less than 50% of funding came from banks. Capital markets have been growing and expanded. So, in which situation would you expect a longer recession as a result of the banking crisis? The 1990s or 1945, the end of the war? Well, it should have been after 1945. But actually, there was only a 2-year recession. Banks already created credit at very fast pace from 1947 for productive purposes. What happened? Well, the central bank bought the non-performing assets from the banks at face value, and therefore moved them off the bank balance sheet to the central bank balance sheet. And the problem is solved. And the central bank doesn't even make a loss. Let's say it buys those non-performing assets, which are worth only 20, it buys them for 100. So it looks like the central bank is going to have a loss of 80. But the reality is it has a gain of 20. It gets something that's worth 20. What did it cost the central bank? Well, nothing. It's a central bank. If you had a license to print money, it wouldn't matter so much to you if you bought something slightly over the odds, slightly more expensive than it should be. Is this going to lead to inflation? Would this lead to inflation? No, it doesn't lead to inflation because no money is created actually. Money is created when the banks and the central bank create money injected into the non-banking sector. But with this transaction, no money is injected into the non-banking sector. It's just a rebooking between banks and the central bank. They're just, cleaning up the accounts. So no money is injected into the non-banking sector. It's impossible to create inflation with this. This is evidenced by the Federal Reserve, which did this in 2008. That explains why in the US, despite the fact that the 2008 crisis started in the US, and that was where the crisis was most significant in many respects. Despite that, banks have been lending already since 2011 at a very fast pace, 4 or 5% bank credit growth, whereas in Europe Ireland, Portugal, Spain, Greece, minus 10%, and so on, for years and years, still ongoing. So the reason is the Federal Reserve did just that, did what the Bank of Japan did in 1945. It bought non-performing assets off the banks, off the balance sheet. So its own balance sheet quadrupled. So a lot of people thought, well, the dollar is going to collapse. Well, it didn't. It rose. Why? It doesn't create money. That's misleading. It's just, central bank balance sheets, you have to know how to read them, because central banks, of course, can manipulate the balance sheets at will. And this transaction doesn't actually inject real money into the economy. So why should there be inflation? There wasn't any. Why should there be a weaker dollar strengthen? Of course, the central bank that pioneered this was the Bank of England, the pioneer of central banks, most of its history privately owned. And the Bank of England did this in August 1914. What happened in August 1914? The United Kingdom of Great Britain and Ireland declared war on Germany and her allies. It turned out that the city hadn't thought this through, and several big banks in the city of London were bankrupt immediately. Why? Well, Germany, the Austrian-Hungarian Empire, all these imperial states, and also the Ottoman Empire, and they were allies. They were doing a lot of their trade, international trade and finance, through the world's financial center, London. So London banks held a lot of their bills and notes, and all that, of course, had to be deemed in default, because you could not legally now claim that money because it was a state of war. So several banks were bankrupt, and the Bank of England thought it's not a good moment to have a banking crisis and have large-scale unemployment. So no, we're not going to have that. Therefore, we'll just solve the problem at zero cost to anyone, more or less overnight, by buying those non-performing assets. Not at market value, but something close to face value, problem solved. So if central banks want to avoid recessions emerging from central banks, then they know how to do it. But this is not what the ECB did. The ECB insists that the Irish government, the taxpayer, Irish people, come up with the money to bail out these big banks. Because as you know, in Iceland, people had a revolt against this and refused to bail out the banks. And what happened? Well, they did quite well.